Good morning, everyone. Welcome to the 24/7. My name is Niharika Balia, and I am with you with the AFM examination. Okay, so kindly let me know if I'm audible as well as visible. Okay, so let's start with the class of accounting today. Continuing with the topic that we were discussing, that was about the basics of accountancy. So let's continue with the topic further. So the first question comes up as these are the basic questions. Today's class is more about the very basic questions, not from the point of view, not only from the era. Sometimes they ask the basic questions as well, but the point of view of coming up with these questions is this is for the beginners. So these are the beginner questions which will help you to connect with the higher levels, right? So that's the basic purpose of today's class. So let's continue with that. The first question is as per the Income Tax Act. Oopsie. As per the Income Tax Act, the accounting year is. The accounting year is from 1st January to 31st December, from 1st April to 31st March, from 1st July to 30th June, or from one Diwali to another Diwali. There was a time in our country where people used to start their uh, years on their basis. They wanted to do it in their way. So what they started doing was it would start from one Diwali to another Diwali. There were some people who would start it from one 1st of January to 31st of December, and then there were organizations which would start on the basis of their gods and goddesses, right? So overall, what happened was they started with a particular system called accounting period method. Under this method, what they did was they decided a particular time which was same for the entire country. If it was same for everybody who was using it. So that was considered as a time period which they called accounting period method, because you cannot study the entire business for the entire life of it. So you have to divide it into small bits. Those small bits are called accounting periods, and the accounting period system was introduced. So as per the Income Tax Act, it starts from 1st of April and ends on 31st of March. Question. This is one of the terminologies. So this would help you to understand any kind of in the later period we'll start with the advanced questions now. So this will help you to understand those advanced questions. Return inward is the term used for sales return, purchase return, credit purchases, or credit sales. See, one thing is called sales, right? One thing is called purchases. Starting with these basics. Sales means when the goods go out, and purchases means when goods comes in, right? That is what something that happens whenever we are selling goods, the goods goes out. So if it goes out and someone gives it back to you, it's called return. And if we give someone, if I got something from any place and then it was a defective one, so I returned it. So if I return something, right? So then what happens? That these both are returns, but the point is this one. People give these things back to us. So it is return inwards, and we give it back to someone else. That is return outward. That's the difference between the two. Number one is return inwards, number two is return outwards. So return inward is the term used for the sales return. Okay, so moving on to the next question. The sum of liabilities and capital is expense, income, drawings, or assets. We have done balance sheet equation, which is also called the balance sheet equation is also called the accounting equation, also called basic accounting equation. So there are multiple names which are given to this basic definition. So the definition, the particular equation is, see, if I invested money into this business, say maybe I'm investing, maybe, okay, I bought an asset, I bought a car worth rupees 10 lakhs, right? So I took out a loan of maybe 4 lakhs, and 6 lakhs is something which I already had. So this is 6 lakhs and 4 lakhs. So what do we do? So this is my liability and this is my asset. Okay, right. I had taken a loan, so this is my liability and this is my capital. So the money which I invested is called capital. The money which I take from outsiders is called liability. The thing that is used in the business to build up the business, to support the business, through which we earn money, called asset. We have done a very detailed definition of asset in the previous class, right? On Friday we did that. So whenever we talk about the assets, how do we build our assets? We build our assets by using loans and at the same time capital, right? Expense, income, drawings, these are not the things that we use in terms of the basic accounting equation. It is liabilities, asset is equal to liabilities plus capital. Moving on to the next question. The person, firm, or institution who does not pay the price of the cash for the goods purchased or services received is called creditor, proprietor, debtor, or none of the above. See, organization can make, okay, the person who does not pay. So the point is, we would have sold goods. We have sold goods, right? And someone has purchased goods. Someone has sold and someone has purchased goods. So when we have sold goods, we are the one who's selling the goods. Someone has purchased goods from us, but they haven't paid back to us. When someone purchases something from you, but they do not pay the money back to you yet, they will be giving it to you within a year. That is why they are called current assets, but they haven't paid the money yet. So these people are called debtors, right? So normally debtors have an oral contract with us that they have purchased goods from us and they would be giving it back to us after a certain period of time. Along with these, there are another kind of you can say current asset which is called bills receivables. So bills receivables are those bills where any debtor had been ordered. Then now there is a written agreement between both the parties, that is us and the debtor, that he agrees to pay and I order him to pay so much amount of money after so much amount of time. That is how they define the term bills receivable. When there is a specific order which is written in nature and at the same time the time tenure is also stated in the bills receivable, then it is called a bills receivable. Otherwise, in terms of an oral contract, they will be making the payment later on. This is basically what we call a credit sales. So if it's just a credit sales, then it would be treated as a debtor. Okay. Now, next question. Goodwill account is this is the beginning of a particular topic. That is, okay, let's understand this topic. There is a golden rule of accounting. Golden rules of accounting. We'll be starting with the golden rules of accounting in the upcoming classes, right? So when we are starting with the golden rules of accounting, I would like to tell you that in terms of the golden rules of accounting, there are three basic accounts: real, personal, nominal. Whenever we talk about any assets, be it tangible or intangible, what we dealt in the last class, they are all covered under the real account. When we talk about any expense, when we talk about any income, it's called a nominal account. And when we talk about a personal account, the account of any specific person, the name of the person is stated, it's called a personal account. So here, since goodwill is reputation of an organization, so the goodwill can be covered as a real account. Now, the next point. The current assets do not include debtors, motor car, bank balance, or the prepaid expenses. When we talk about the current assets, these are those assets which are used in the business for a period of 1 year or less. So that is debtor, motor car, bank balance, prepaid expenses. Current assets do not include a motor car, because motor car is a long term asset, while the debtors are paid, we receive money from them within 1 year. Bank balance, it changes every single day, so that means every day if you're using Paytm and Beam UPI or any of those, then your bank balance is changing every single day. Then prepaid expenses are those expenses which are paid before time, but you'll not pay for next 2 3 years altogether. So it's maximum an year, right? So then the correct answer would be motor car, which is used for more than maybe around 10 years, right? So current assets do not include motor car. Now, the things or the properties which help in smooth functioning of the business, which are owned by the business, are called dash of the business: liabilities, capital, profit, or assets. Anything which helps in easy functioning of the business. These things helps the organization to continue in a proper way. Their execution becomes easier. How do they look forward towards the working of these basic elements? They're called liabilities. They are called capital. They are called profit or assets. What are they exactly called? See, liabilities are burden on the company. They do not want to take this burden, but they face it. Then capital is the money which the proprietor invests. Profit is what they make, that is, their expenses are less than their incomes. And then assets are those things which help in the development of an organization. Because, okay, let's talk about assets. There, assets are those elements which are helpful for the organization in generating their revenue. So the correct answer here would be assets, right? Moving on, the sales is recognized as revenue when the contract for sale is entered into at the point of sale or performance of the service, after the expiry of the credit period allowed to the debtors, after the money collected from the customers. The sale is recognized as revenue. See, sales refers to anything that you are selling to the people. That means there's a transfer of the goods to them and then you receive money for that, right? So, when the contract, how do you recognize it at what point of time? Till the time there is at the point of sale. See, there are 2 points. Either we can look forward to the accrual system or we can look forward to the cash system. Under accrual system, even if things become due, then we charge it. Then under cash system, only when the cash is genuinely received, only and only then we record such things in our books of accounts. So that's the basic difference. But when do we recognize it as a revenue? When the contract for sale is entered into at the point of sale or performance of service, at the expiry. See, if the debtors are supposed to pay us, that means that we had already sold them something. No? That's not relevant there. After the money collected from the customers, this can be done only when we are looking forward to the cash system of accounting. Here we are not looking forward towards the cash system of accounting. Here we are looking forward towards whenever we are making the sales. So that is at the point of sale or performance of service. This is where whenever we find that the service is due, only then we record it, right? Okay, one more particular terminology that we are learning today is called the trade discount. When we talk about the discount, which is allowed at the time of receiving the payment, which is allowed at the time of sales of goods, which is allowed both at the time of receiving the payment and sale of goods, or allowed in all of the above. Whenever an organization is selling goods or purchasing goods, and both the things are done in terms of bulk, for example wholesaler to retailer, and then such things are happening, so the retailer will always expect that we can get a little more discount because we are getting the stock in at a greater amount, right? So we are getting it from you, so is it by any chance we can get some more discount there. So that introduced a particular discount called trade discount. This is allowed only when you are having a bulk purchase. So, but there is one more rule. Trade discount is never shown in the books of accounts. It's just shown in the calculations. That means you note down the list price, then from there you deduct the trade discount, and whatever you are left with is your actual amount. So that is it. The trade discount is something which is taken here, right? So which is allowed at the time of receiving the payment? No. Which is allowed at the time of sale of goods? Which is allowed at both the receiving of payment? See, when we talk about, there are two kinds of discount actually. If I have to define the discount now, there are two types of discount. One is CD and one is TD. Cash discount is given when you make a prompt payment, and trade discount is given whenever we find that we have made any bulk purchases, or someone makes bulk purchases from us, then we are also bound to provide them the same. So both of these discount are different. So one is list price minus TD. This is what we record in the books of accounts. That means if I was supposed to get something for 10,000, मान लीजिए, if we have got something for 10,000 and then we are taking a we are giving them a discount of 10%. That means we'll just reduce that 10% of it. We are left with 9,000. Now this 9,000 would be recorded in our books of accounts, not the 10,000, not anything else, but only 9,000 rupees. Nobody is going to know that we have got 1,000 rupee of discount. Only then we are getting it. This is the rule of accounting there. Trade discounts are never shown in the books of accounts, which is allowed at the time of sale of goods. Okay, so here it is. We are ending this particular class today, and we have officially started with our batches for the JAIIB as well as the CAIIB. So if you haven't reviewed our batches yet, then kindly go ahead and check it out on our website. I'm just giving you a little brief about it. If you really feel like looking forward to our classes, again, it is going on. So that will help you a lot to study properly in your examination. For your examination, because ultimately I know every day that is passing by is again, if we start the preparation earlier now, then it doesn't really create a trouble. It creates a trouble when we do not study properly, or we do not have ample of time, and everybody is working, and there's a good amount of pressure of work as well. So considering that, we should always start our preparations before time, and so that you can actually look forward to it in a proper way. See, our batches have already started. Number one batch is our the JIB new target batch, right? So both the batches are officially starting from today. That is December 19. So you can review all our batches. So the details of all the batches are given here. So all the faculty plus the individual subjects plus the entire area is given here. If you're looking forward to any of our batches, all you need to do is you need to click on that particular batch, and you can find the details. There are 145 hours of live classes, 73 tests, well as 67 ebooks. So all the classes, the details of all the classes are given here. All you need to do is you need to click on the area of buy now, and you can use the code Y541 and you can apply it. So there you will find that you can get up to 80% of discount, and the amount is 3999.80 at the moment. So if you're looking forward to it, then kindly hurry up and check it out on our website or in our app. At this point of time, 80%, 81% discount is going on. So that would be really helpful, because ultimately I believe you get that particular thing at a good price, then it's the best thing to look forward to, right? Because studying is an investment, and if you get it at a good price, then obviously there is a little less pressure on the person there. So if you're starting with your preparation before time, then there won't be a hurry by the time the examination actually hits in, right? So go ahead and check it out on our website or in our app. The batches have officially started, so please go ahead and join them. Thank you. And you can use the code Y541 to get the discount there.